Get talking about earnings. It's time for coffee. CCL Products, the company reported a 14% rise in revenue from a year ago. The net profit remained flat owing to higher depreciation, higher finance costs as well. The important metrics to track for them, volume and EBITDA per kg. Challa Srishant, who's the managing director of the company, joins in to discuss these numbers in detail. Challa, thank you for joining in. Always a pleasure speaking with you. And this time it's before the conference call, so all the analysts have tuned in as well. So let's get the basics out first. Your EBITDA has grown by about 12%. What has been the volume growth in the third quarter, the first 9 months of this year? What can you guide for this year? And even the EBITDA per kg, how has that panned out in the third quarter?
So actually the EBITDA per kg was a little better this quarter because there was a slight change in our customer mix. We were actually focusing more on more long-term customers, more supermarkets that we were able to onboard in this particular quarter and supply to them. So we were not focusing on the low margin, high volume business that we were doing earlier. We wanted to get more sustainable business in the long run as well. So we laid that foundation in this particular quarter.
That still didn't answer our question. What was the EBITDA per kg this quarter? Was it more than 110 that you were targeting earlier?
Yes, it was.
What is the exact number?
I think about 114, 115 approximately.
And volumes?
The volumes, there was a marginal growth, not too much. So it was between, I think, around 4 to 5%, if I'm not mistaken.
All right. But earlier, I think you were guiding for around 10 to around 20% of volume growth for the year. How do you think you'll end up this year at?
We'll still be at that same 10 to 20%. We're confident about that.
10 to 20%. Got it. All right. Could you tell us what is the current capacity utilization levels across your plants?
We are with the expanded capacity that has come online. The old capacity is running at full capacity. The new capacity is running at around 30%. So overall blended, I think around 65% is where we are at right now, 65 to 70%.
All right. Give us some numbers with regard to your branded business, because the street actually is quite optimistic of prospects. So there on a small base, how can it increase? So for this year, what do you end up with in terms of the branded business, and how do you see this scaling up?
So brand, we are expecting about 300 plus crores for just the brand alone, and another 140 crores for the bulk and private label within India. So overall domestic business will be 400 to 440 crores that we'll be ending up.
And what happens to the next year? Because this has been a business that you've been growing. The first half of this year, you did 200 crores. The second half, you did about 250 odd crores. What's the prognosis here? When you're looking at, say, 1,000, 1,500, 2,000 crores from a business like this?
So as of now, we are confident about maintaining around a 40% growth year on year. So it will take a couple of years for us to reach the 1,000 crore mark for the branded business.
So next year you'll be closer to around 600 crores. So by FY28, it appears like it'll be a 1,000 crore business. Going by, mathematically, that should be the number, right?
No, actually, it'll be a little longer. The branded business is at 300 crores right now.
Okay.
The overall domestic is around 440. So the overall domestic business, yes, it'll be 1,000 crores in another 3 to 4 years. But the brand per se will take at least about 4-5 years.
All right, we take that point. What about plant additions? Because you had the Vietnam freeze-dried plant, which was likely to come on stream, adding close to around 6,000 tons in the second half of this financial year. Even the India spray-dried plant, which was supposed to come on stream at the start of this year, where do those additions stand at?
Yeah, so the India expansion has been completed. So that is already online. And in fact, that's one of the impacts that we are seeing on the balance sheet in the standalone, the depreciation. And there's also the SEZ, which has come into the tax bracket, about a 50% tax bracket that it's come into. So there's an additional deferred tax also, which is why the PAT was muted for this particular quarter. And as far as the FD in Vietnam is concerned, we were supposed to come online around this time. So the commissioning is taking place at this point in time. So we should be coming online sometime this quarter.
So once again, for the benefit of our viewers, if you could tell us what is your existing capacity in India and Vietnam? How much of that is spray-dried? How much of that is freeze-dried? And how much comes on stream by the end of, say, next year?
So earlier we were at around 50,000 tons. Now combined capacity is going to around 77,000 tons. There's a 6,000 ton capacity of freeze-dried that's coming online in Vietnam. And the India 16,000 tons of spray-dried has already come online.
All right. And the debt number, because we did see finance costs spike up as well, and that also was an additional, weighing down factor on the net profit. Where does that number stand at?
We're at around 2,000 crores at this point in time because the coffee prices are at an all-time high right now. But the good news is that the effective tax rate has come down from last year. Last year, it was close to around 7%. Now it's closer to around 6%.
All right. And final question before we let you go, if you could give us a sense of your product mix. I remember a large part of your margin appreciation would be coming from premium products like cold brewed, etc. Also small packs. How much did they contribute in your overall mix right now? And what is that likely to go to?
Actually, that is one of the reasons why in this particular quarter, we've seen a slight improvement in our EBITDA margins. Because of the supermarket business, we were able to do more of small packs in this particular quarter.
And where does your market share in India stand at?
Market share, we are at around, brand-wise, around 4% at this point in time.
And in the stores that you operate? And in the stores that you operate?
In South India, we're closer to around 20% in AP and Telangana.
All right, take that point. Challa, always a pleasure speaking with you. Wish you a good cup of coffee after this conversation, and perhaps we have a conversation at the end of the next quarter as well, where some of your plants would come on stream as well. With that, it's time for Growth Code. And